High yield bonds offer one of the best opportunities for regular income from interest payments for fixed income investors. Here we'll look at the best high yield bond ETFs. Why would we be interested in high yield bonds? High yield bonds are lower credit quality corporate bonds. Because of this higher credit risk, these bonds pay the highest yields compared to higher credit investment grade corporate bonds and treasury bonds. High yield bonds are also known as junk bonds due to their lower credit rating. High yield bonds have become more attractive recently as yields on treasuries have fallen. High yield bonds are still less risky than stocks. They offer somewhat of a middle ground between safe, stable treasury bonds and risky stocks. Selecting individual junk bonds can be very risky, but buying a basket of them via an ETF allows investors to diversify across many different individual high yield bonds, thereby lowering the risk profile. Here we'll review the best high yield bond funds. First on the list is HYG, the iShares iBoxx High Yield Corporate Bond ETF. HYG is the most popular high-yield bond fund out there with over $30 billion in assets. The fund seeks to track the market iBoxx USD Liquid High Yield Index. This ETF has a weighted average maturity of roughly 4 years and an expense ratio of 0.48%. Second on our list is JNK, or JUNK, the Spider Barclays High Yield Bond ETF. JNK is another popular broad high-yield bond fund. The ETF seeks to track the Barclays Capital High Yield Very Liquid Index. Compared to HYG, JNK has a slightly lower average credit rating and thus a slightly higher yield. This ETF has a weighted average maturity of about 6 years and an expense ratio of 0.40%. Next on our list is HYLB, the Xtrackers USD High Yield Corporate Bond ETF. HYLB is one of the more affordable high yield bond funds on this list to access USD denominated corporate debt with an expense ratio of 0.15%. This ETF seeks to track the Solactive USD High Yield Corporate's Total Market Index. Next on our list is USHY, the iShares Broad USD High Yield Corporate Bond ETF. USHY seeks to track the B of A Merrill Lynch US High Yield Constrained Index. USHY provides broader exposure to the high yield bond market than the previous ETFs and would be more suitable for long-term holding. The ETF has an expense ratio of 0.15%. This fund is a component in the dividend portfolio I designed for income investors. Next on our list is ANGL, or ANGL, the VanEck Vectors Fallen Angel High Yield Bond ETF. ANGL provides access to coveted fallen angels, which are historically strong, stable companies that are likely having temporary financial issues. This ETF seeks to track the ICE US Fallen Angel High Yield 10% Constrained Index and has an expense ratio of 0.35%. Do you own any of these high yield bond funds in your portfolio? Let me know in the comments. Thanks for watching. Some of the links below are referral links at no additional cost to you. If you choose to make a purchase or sign up for a service, after clicking through those links, I may receive a small commission. This allows me to continue producing high quality content on this channel and pays for the occasional cup of coffee. I have first-hand experience with every product or service I recommend, and I recommend them because I genuinely believe they are useful.